try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government.
Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your weekdaily morning show. We bring you the latest and everything Bitcoin. In today's episode, we are going to be talking about the drop that's happened on Bitcoin over just the last 72 to 96 hours. Bitcoin has been dropping a couple of $1,000s in anticipation and following a couple of events. First and foremost, last week on Wednesday, May the 3rd at 2:30 in the afternoon, 2:38 exactly, Jerome Powell teased that there may be a rate pause coming at the next FOMC meeting on June 14th. That predicted rate pause at 5.15% would send shockwaves through the United States economy, through the stock market, and also through the Bitcoin and the cryptocurrency industry. That would likely lead Bitcoin into a major rally. And so Bitcoin went into a major rally following that tease that he released. On top of that, we now believe that there's going to be a drop on CPI inflation data coming out tomorrow at 8:30 a.m. when the Bureau of Labor Statistics releases its most recent data. Currently, inflation stands at 5% year over year annualized. We are seeing that likely come down tomorrow, meaning that we will well and truly have a higher effective federal funds rate than an inflation rate as produced by the FOMC and the Bureau of Labor Statistics. With that setup, where the EFFR is higher than the inflation, the Fed can then begin lowering the effective federal funds rate as the inflation rate continues to go down. It's very possible that we might have one more rate hike, and then come early August, then when we see a meeting, then there may be a pause, but more than likely we're going to see a rate pause coming in just the next couple of weeks to the next month or so on June 14th, and when that occurs, we're likely going to see a major rally. But the thing we want to hone in on today is the very high likelihood that we are about to see a rally on Bitcoin tomorrow, and I want to show you a couple of the trade setups that I gave you yesterday, update you on those, and make sure you guys are prepared for tomorrow's movement, because there should be a major breakout coming at 8:31 Eastern tomorrow morning, and you're not going to want to miss it. Let's go ahead and read some chat. We've got a lot of people that have tuned in this morning. Thank you guys so very much for tuning in. We've already got 200 people in chat. This is Coffee and Crypto Live, so make sure you grab yourself your cup of Joe. As you guys know, I went off coffee for a little while, knowing that we were going to have a newborn coming. So we have a newborn named Charity. She is 4 weeks old as of today at 4:47. So very excited about her, but definitely can use a little bit of the pick-me-up. So welcome to Coffee and Crypto Live. If you are new here, really appreciate your support. Crypto Surg said good morning, and Crypto Surg, you were first. So shout out to you, my friend. Mike Lowry in chat as well said good morning, everybody, with the cup of Joe. Hashtag FinSov. Mike Lowry's got it down. FinSov is this idea of financial sovereignty. I want your finances to serve you, not the other way around. The Bible says you cannot serve both God and mammon. That means you cannot serve one thing and another. It says earlier on in that verse, no man can serve two masters, for either he will hate the one and love the other, or else he will hold to the one and despise the other. You cannot serve both God and mammon. And so what that means is that you cannot serve whatever it is your calling in life. As a Christian, my calling in life is to serve the Lord Jesus Christ. But your calling, hopefully that is your calling. But if it's not, then that's between you and yourself and the Lord. Whatever it is that your calling is, you cannot serve that properly and serve money at the same time. If you are trying to serve a ministry, if you are trying to serve a charity, if you are trying to serve a sports team, if you're trying to serve your wife, your children, your father, maybe you're a nurse, you're a doctor, whatever it is that you are trying to serve, it is a biblical truth and a statement of fact that you cannot serve two things at once, because either you will love the one and hate the other, or you will hold to the one and despise the other. And so what I want to help you to achieve here on the Crypto Jebb YouTube channel, and with everything we do, including Club DeFi, I want to help you guys achieve what I call financial sovereignty. That is a state where your finances are serving you and you are not serving your finances, because I guarantee you, as somebody who has made millions of dollars in business history, I'm not saying that to brag, but just so that you know I know what I'm talking about, it is not going to bring you purpose to make a lot of money. It is not going to bring you fulfillment to be very, very wealthy. It is not going to bring you joy to be rich. Full stop. That being said, having purpose in life is very important, and you need money to do many of the things that are going to be purposeful. So I want to help teach you guys financial sovereignty so that you can have everything that you need in the place that you need it to pursue whatever it is that you've been called to. Daniel J's in chat as well said hi. Chris Moe said woot. Sean O'Brien said hey. Rockin' Metal News said good morning family. Crypto Surg said OMG, am I first? No way. You were first. Shout out to you, Crypto Surg. Drew House got a real bad feeling. Oh, man, that's sad. Chris SF said, good morning, y'all. Jonathan Weiner said, good morning and God bless. God bless. I got a lisp today. Wisely T said, good morning, Jebb. JS said, let's go. Mario De Leon, good to see you, Mario. Hope you had fun in office hours last night. Guys, we did have office hours last night for all of our Club DeFi members. If you're in Club DeFi, there is a post at the very top of your courses section, which gives you an invite to Discord. So you can go ahead and join the Discord server and get access to office hours. We had a bunch of people over there last night talking about all kinds of different things. We talked a lot about Bitcoin, talked a little bit about Cardano, and also talked a little bit about just some personal things that if you're in office hours, you will get to learn about. I'm really excited for where office hours is going. Kevin is in chat. Colin McDonald's in chat. Queen's in chat. Silas E. Borg. Crypto Trucker Mike. Carlos Mejia said, new to your show channel. Shout out to you, Carlos. Welcome, my friend. Hopefully you find what we're going to talk about today entertaining and informational. JS said, strength and humility. Zanoni Snowflake said, congrats on charity. Gorgeous name. Your beautiful growing family. Thank you so very much. Francisco Alvarez said, I understand, but how I start learning in your channel? Well, I think that is a good segue into what we are going to talk about today, because today's episode of Coffee and Crypto Live, just like every episode of Coffee and Crypto Live, is ultimately about information, but it's also about education. So I want to kind of pitch something to you really quickly, and that is that over the nearly 6 years that I've been working in the cryptocurrency space, I've been attempting to bring people high quality informational and educational content so that they can learn how to achieve financial sovereignty. If you want a mission statement for the channel, boom, there you go. I want it to be informational, educational, a little bit entertaining, but for the most part, informational and educational, professional, so that I can help you guys achieve that financial sovereignty we just talked about. We do that in a lot of ways. We talk about that here on Coffee and Crypto at 10 a.m. Eastern every single weekday. We talk about that on our videos, Climate of Crypto. I'm actually about to shoot one after this stream's over, and we also talk about it over here in Club DeFi. Guys, I have been teaching students how to do technical analysis for nearly 5 years. This September 23rd will be 5 years since CT2A, the Cryptocurrency Technical Analysis Academy, launched. And in the Cryptocurrency Technical Analysis Academy, we help teach over 5,000 students how to do the technical analysis that you're about to see in this stream. Here in Club DeFi's Principles of Technical Analysis, we have completely revamped CT2A, relaunched it with a lot more content, and it also has the Discord server and office hours and so many more perks that are coming. So if you are interested in learning about technical analysis, you can start here by watching the channel and watching the video, subscribing to the channel. But if you really want to go deep in learning how to do the technical analysis that we're going to do today, I highly encourage you to sign up for Club DeFi's Principles of Technical Analysis with the link in the description box down below. Let's get started here. We're going to go ahead and jump on over to CoinMarketCap and take a quick look at what Bitcoin is doing. You can see Bitcoin is down 1.18% over the last 24 hours. It is down 1.75% in the last 7 days, but still up 20% in the last 90. This is very important context because it's easy to get discouraged whenever Bitcoin is continuing to move to the downside and setting lower highs as it has been recently. Bitcoin has set several lower highs. In fact, 4 lower highs in a row. Not so much lower lows, but generally this kind of trend of our general price action is moving to the downside. And you can even see that if we go to, let's just say, let me pull a number out of the hat, the 4 hourly chart 50 moving average. Yeah, the 8 hourly chart 50 moving average. You can see the 8 hourly chart 50 moving average is starting to move to the downside. That kind of gives you this middle line that Bitcoin is following. It's been dropping pretty hard. So it's easy to get discouraged, but just remember, Bitcoin is up 19.11, M1911. Tell me who gets that reference. Up over the last 90 days. That is much more than you're going to find in the stock market over the course of just about any year on record. If you go into the stock market and you look for any 1 year period, you're going to be hard-pressed to find a 20% gain unless you go and look at something like the recovery from the pandemic. If you go and look at the SPY, if you pick a random year and you like cherry pick it, maybe. But if you're getting into the space because you don't know exactly when it is, when you don't know exactly when to get into the space and you're not buying the bottoms perfectly and waiting exactly a year, it's very rare that you're going to find those kind of gains here in the SPY. See, you can find them if you pick the bottom. It's very hard to find these bottoms on the SPY. If you're coming here into the stock market, your best bet a lot of these years is that you might get 10, 11, 12, 13, 14, 15, 16% in a year. Bitcoin is up 19.11% in the last 90 days. Ethereum's up 10% in the last 90 days, but it's down almost 1% in the last 24 hours. It is up about 0.1% in the last 7 days and up 53% year to date. Both of these cryptocurrencies are performing very, very well over the last 4 months and 9 days, whatever it is, since we've started the year. And I do expect and anticipate that will continue. Now, before we even continue here, I was pitched a question in office hours last night that I thought was very interesting. The question was, Jebb, I've seen a lot of people say that we were going to likely see a drop that we were likely going to see a drop on Bitcoin down to below $20,000. What do you think about that? I think that it is very possible that we would see that drop down to below $20,000. But the tricky thing is, if we do see a drop to below $20,000, that kind of means that the Bitcoin market has shifted a lot of its attention. Right now, Bitcoin is in this very strong uptrend. If we look at all kinds of different factors, such as the alignment of our moving averages, let's just look at our 50, 100, 200. The alignment of our moving averages are bullish. We have the 50 on top of the 100 on top of the 200. You can see that's something that only happens during bull markets. We can see those alignment of moving averages right here and right here. 50, 100, 200. 50, 100, 200. Over here, for a time, we had the 200 above the 100 above the 50. That was very bearish territory. Then we started to see that transition coming in January, where we saw the 50 cross above the 100, then the 50 crossed above, it crossed above the 200, then it crossed above the 100. Sorry, it crossed above the 100 first, then above the 200, then the 100 crossed above the 50, and we had the 50 above the 100, above the 200. That's how you see that transition play out. That's what you normally see during bull markets. That's not the only signal. That's not the only signal that you see of bull market territory, though. If you look at Lux Algo, you can also see that we've entered into a strong buy signal on the Lux Algo weekly chart back here on January the 9th that was confirmed here on March the 6th. It was actually confirmed on the Monday, March 13th candle when the trend catcher turned green. You can see the signal is right here. Trend catcher turned green. Effectively giving Bitcoin the bullish confirmation that it needed. The smallest rally that we have ever seen in history from Lux Algo's confirmation, such as this one, was our buy signal here with confirmation here. By the time we saw the confirmation, Bitcoin rallied 57%. Again, that's the smallest example. Over here, ever since the confirmation, Bitcoin has rallied 40%. That would be the smallest rally that we've ever seen from a confirmed Lux Algo buy signal. When we saw our last confirmed Lux Algo buy signal on weekly chart, we saw Bitcoin rally 576%. Coming over here, when we saw a confirmed buy signal, we saw Bitcoin rally 235%. Coming back over here, when we look at some of these buy signals, such as this one right here, we saw Bitcoin rally 5,000%. Now, I'm not saying Bitcoin's going to go through a 5,000% rally again, because if it did, then Bitcoin would have to go to, oh goodness, let's see here. Bitcoin would have to go to $1.25 million. I think that is a bit of a stretch, considering that would put Bitcoin's market capitalization well into the tens of trillions of dollars. That's possible in the future with an inflated Bitcoin, with an inflated dollar, but that's going to be difficult with the size of the current global economy. Point being, if Bitcoin was going to go down to $20,000 or lower, it would have to buck the trend on quite a lot of these variables, but it is possible. And the reason that it's possible, and this is a bit of a tangent, this isn't the main point of today's episode, I just thought it was something nice to recap. The thing to keep in mind here is that Bitcoin is also in a very similar state to where Bitcoin was in 2019. Note the year. It's an odd year. It's a very odd year, but as far as the number is odd, 2023, we are in an odd year, the same way 2019 was a very odd year. I remember 2019. I crashed a motorcycle that year. It was a very odd year for a lot of reasons for me personally and for the cryptocurrency market. A lot of confusion in the space. That's kind of where we are right now. We're in an odd year. Bitcoin was in an odd year in 2019. Bitcoin did manage to rally 335%, but the halving was still a year away. The halving would take place, what was it? I want to say May 16th, May 11th. I think it was May 11th was when the halving took place. We were still a year away from the halving when we were in the middle of this rally. Bitcoin ended up going through a major correction. Probably would have dropped down to about $6,000 if not for the pandemic, because the pandemic had dropped down to $4,000. Without that black swan of the pandemic, Bitcoin would have dropped 55%. Because of the black swan, Bitcoin dropped 70%. I can't chart based on a black swan event. So if we did drop 50% from a local high, which would probably be like 32,935, Bitcoin could drop down to like $16,000. Is that going to happen? I don't think so. Why? Because this rally is smaller percentage-wise than the rally in 2019 was. This rally so far is only 112%. Only 112%. This rally was 370%. So proportionally, we might be looking for a 25 or 30% drop from 32,935. That could put us right above 20K. I could totally, just so you know, I could see dropping down to $20,000 happening. For reasons I just explained. Bitcoin back during that time was about a year away from the halving. Right now, we are about a year away from the halving. The next halving is likely to take place right over here in the early part of the second quarter of next year. We're about a year away. It's very possible that we see another couple of legs up over the next 2 to 3 months, maybe rally to $32,000 to $35,000, have a drop down to 20 to 22, and then we go through kind of the first Elliott wave correction of the bull market. If you remember, there is this thing called Elliott waves. We had kind of this 1, 2, 3, 4, 5 Elliott wave bull market. One wave, a corrective wave, a second wave, a corrective wave, and then a third primary wave. We saw kind of a similar thing happening during the last bull market in 2015, 16, and 17. You kind of have to squint and cock your head to try and figure out where it is. It doesn't really line up with Elliott waves very perfectly. That's why I don't talk about Elliott waves very often. But in theory, we did see a Elliott wave 1, 2, 3, 4, 5 bull market. It's possible that we see something very similar here. We could be in the first wave of the bull market. We have a corrective wave that sets a low higher than the previous low, because I think 15,700 or whatever the bottom was our absolute low. Then we rally up to maybe all-time high, back test, and then rally to 100K. I could definitely see something like that happening. It's not out of the question. It would also make a lot more sense than Bitcoin just rallying straight to the moon, never stopping for gas. So we will keep that in mind over the next couple of months. The next 2 months outlook really does lead me to believe that Bitcoin's going to have a lot of bullishness as a result of the CPI data coming out tomorrow, so long as it's a drop, and as a result of a likely Fed pause on the effective federal funds rate coming out June 14th, which will be one day after what we hope to be another bls.gov/CPI. bls.gov/CPI. You ruined my transition here, keyboard. CPI data drop. You can see it's coming out tomorrow, May 10th at 8:30 a.m. Eastern. We're at 5% right now. I'm hoping for us to go down to at least 4.9%. This is going to be the make or break CPI data release. Reason being, if CPI drops by over 0.1%, so we're talking 0.2, 0.3, 0.4%, which is very possible, what that entails is that the Fed is very much on top of its game, getting inflation under control. They do not need to hike rates anymore. If we see a 0.1% CPI data released, that's probably 0.1 to 0.2 is probably the most likely, because we dropped a full 1% last month. You might think, well, we dropped 1% last month. Maybe we'll drop 1.2% this month. Maybe. It really depends on how all the data rolls off. The tricky thing is, since you already dropped 1%, it gets incrementally harder to drop inflation by another 0.1% after you've already dropped 1%. Good example, it's a lot harder to double Bitcoin's value than it is to double Pepe's value. You know, you add $1 billion for Pepe versus you add let's see, $500 billion in value for Bitcoin. You have to find $499 billion worth of value to double Bitcoin, $500 billion worth of value to double Bitcoin, where you only have to find $1 billion to double Pepe. Bitcoin's worth a lot more than Pepe intrinsically. So don't get me wrong. I'm not saying, oh man, go long on Pepe. That's not my point. I'm just saying that the closer you are to the absolute in the market capitalization going up, since the absolute is infinity, or maybe you might say the total value of the entire global economy. With inflation, the absolute is zero because you're moving down versus moving up. So it's harder to get It's harder to get to zero than when you're at 5% than it was at 6%, than it was at 7%, than it was at 8 or 9 or 9.6% like we were at last June. So it's going to get incrementally harder to see CPI data drops of 0.1, 0.2, 0.3, 0.4, 0.5%. So I'm hoping for a 0.1% drop. It is very possible it's a larger drop because, again, a lot of that data is rolling off. It has now been 14 months since the effective federal funds rate began hiking. It's a full year, which means that much of the inflationary mechanics that were driving Bitcoin to the upside have now rolled off. You can see over here on the log chart, it is currently May 9th. You can see we were hiking rates a second time right around now last year. It's been exactly 53 weeks since the second rate hike. Coming here in early June, that was when the third rate hike and the first 75 basis point rate hike came in. So with that data coming in a year over, then you basically look at it like this. The effective federal funds rate happens. That takes a couple of months to have an impact on Bitcoin. That takes a couple of months to have an impact on the price of assets, because there's a lot of trickle down that has to happen. It's a very complicated system, the United States economy. One of the most complicated systems in the history of creation. And the trickle-down effect of raising interest rates, which impacts, overnight banking transfers, which impacts whether or not companies are going to be able to take out debt and credit, which impacts the mortgage rates, which impacts individuals and how much of a home they buy, which impacts how many new jobs a company can create versus how many jobs it has to lay off because it can't raise new capital. It takes a long time for the effective federal funds rate to impact all of those different sectors of the economy. So you need a couple of months of buffer there for it to really start having its impact felt. Then, because CPI is a 12-month moving average, it takes a year for the heightened inflation that you now are trying to bring under control because of the EFFR to come under control. So you really need a full 14 to 15 months after an effective after an EFFR rate hike for its effect to be felt in full on the CPI. So there is a hope that because 14 months ago we started hiking rates, now that 25 basis point rate hike that we saw in March of last year, right around the Ides of March, the Ides of March, coming in to kill the global economy. Once Julius Caesar, now the dollar. Anyway, it's very possible and frankly very likely that this 25 basis point rate hike is now having its full effect felt. Which means, because you have to add 14, 15, 16 months to all of these rate hikes to have their impact felt fully by the CPI, because it's a 12-month moving average and it's rolling off the 12th month of data as it adds on a new month of data, the 13th month of data as it's adding on a new month of data, then these three rate hikes right here are the ones that are really having their biggest impact. The most recent rate hike and the most senior rate hike are the ones that are having the biggest impact on CPI. Most recent, because that's going to cause a instantaneous change in some prices, but then these older rate hikes because it's allowing data to roll off. You remember about 2 months ago when we saw a massive drop on the energy category in the CPI data. You can see it's sitting at negative 6.4%. The reason that happened is because we rolled off 13 months ago data of the gasoline and natural gas prices here in the United States just moonshotting. So we saw energy go down from being like 60% inflationary down to 20% in one CPI data release. That's probably what we're going to see happen on some categories to a much lesser extent over the next few months as inflation started to get under control a year ago, but now the data is rolling off. Hopefully that makes sense. The point I'm making here, will Bitcoin go down to $20,000? Maybe. But what I'm more interested in seeing is how is the market going to react tomorrow when we see a probable, but probably a small CPI data drop. Now, if it goes up, which I suppose is possible because things are still increasing in value and we did drop a full 1%, meaning it is harder to go down, that would mean that the short trade position that I gave you guys an example of last week would need to come into full swing. So let's go ahead and finally get to the title of today's stream and talk about why a huge Bitcoin rally may be coming within 24 hours based on everything we just talked about, and then also on the caveat. If you guys are enjoying today's stream, make sure to hit that like button, subscribe to the channel, hit that post notification bell so you won't miss a single beat. Thank you guys so much for tuning in. All right, yesterday I gave you two trade setups based on the fact that CPI data is going to be releasing at 8:30 a.m. tomorrow. Let's go ahead and take a look at some of those trade setups. Now, this is the vertical line to show when this data is going to be releasing. It's at 8:30. We also have a couple of other lines here that I want to bring to your attention. That's this uptrend right here that Bitcoin has really been building its entire market structure off of. If you guys don't know what market structure is, you need to know what market structure is. You can learn about market structure and principles of technical analysis. Find the link for that down below. That's our video educational course, which also gives access to our premium Discord server where we cover all kinds of technical analysis so that you guys can be experts in TA. Now, the market structure that Bitcoin is facing right now is that uptrending level of support. It is facing this flat level of support at, let's say, about $27,100. And it's also facing, although it started to break below this already, it's also facing the 50 daily simple moving average. Now, the tricky thing is Bitcoin's actually broken below its 50 daily simple moving average in a very similar way to how it did here at the very bottom of its correction here in early March. Bitcoin would then end up falling back down and testing the 100... excuse me, Still getting over a cold. Fell back down here to test the 100 and the 200 and then had an immediate bounce and went through a major rally moving into CPI data release. We are now below the 50, so now we're looking for other support. That would be this uptrend and this level of support at $27,100. If Bitcoin is not able to hold one or both of those levels, then that's where this short trade kicks in. We're looking at the caveat first because I'm hoping that the rally will be what actually takes place, but we shall see. Bitcoin is making up rules as it goes because we can't always know exactly how something like government data is going to impact Bitcoin, but in the same way that we could be more certain of the way a technical indicator would impact Bitcoin because we have a lot more historicity to go off of over 100 plus years of chartists learning about how certain technical indicators impact the market. Now, if Bitcoin does fail to hold this uptrending level of support, which it's attempting to hold right now, you can see Bitcoin doing this kind of this heartbeat wave around that level, just seeing if it's going to hold it or not. If Bitcoin doesn't hold this, the last line of defense before a drop down to potentially $25,236 would be $27,100. If Bitcoin does drop below $27,100, I set up this short trade yesterday for you with a very particular stop loss entry and target. The entry is at $27,000. The reason for that is because if Bitcoin falls below $27,000, in fact, I'm going to update this just a little bit. Let's set this to $26,950, maybe $900. Let's say $900. If Bitcoin drops below $27,000, it might go down there and kind of just overextend a little bit. So this is where you want to use a very tight stop loss. You want to make sure that you're entering a trade with exuberance. The idea here is basically if CPI comes out and it's a positive, so inflation goes up, Bitcoin's going to tank and it's going to hit $25,236. You can quote me on that. If we see inflation go up by 0.1% or more, Bitcoin's going to crash and you're going to make a lot of money in this short trade. The entry price I'm giving you is $26,900. Exit price I'm giving you is $25,500, but I always encourage people not to exit a trade just with one exit. A lot of times it's better to exit it in 2 or 3 exits, broken up into halves or thirds. Reason for that is that you can ladder out of a trade. A lot of times it's just as easy to enter a trade all at once, but you can ladder out of the trade. Let's say if you're shorting with one Bitcoin, you cover yourself with a third of a Bitcoin each time. Maybe at 26,000, maybe at 25.5, and then you hold on to a little bit more of it just to try and catch a little bit more. That's dangerous with a short trade because it's not your asset, and it's also dangerous with a leverage trade. If you're going to try and hold on to just a little bit of it, then make sure that in general you're in a long trade and you're not using leverage so you can just roll it over into your investing portfolio. That's a pro tip with trading. Sometimes if you make a bad trade but you're long and you're not using leverage, you can just say, screw it. I'm not even going to exit that trade. I'm just going to throw it in a ledger and forget about it for 5 years, and eventually it'll be in profit, right? I've done that plenty of times with trades that went sideways, and it's like, yeah, I'm down 3%. No! I'll be up 500% if I wait a decade, so whatever. You can't do that with short trades, though, so you have to be a little bit more careful. This is the caveat. The stop loss I just put at $27,298, just kind of a random number. Just a pretty conservative stop loss. This is 1.5% stop loss. This gives us a risk-to-reward ratio of 352 so that we can make sure that we have a solid risk to reward ratio. Make sure that if you're using this trade, that you're prepared for Bitcoin to go through a major drop, because that's what you would be catching. You'd be catching a falling knife as a result of Bitcoin CPI data coming out positive. I would not enter this trade unless you see CPI data come out positive. Now, on the flip side, we have this buy trade sitting up here at 28,700. This would necessitate Bitcoin going through a major rally, breaking above 28,545. And the reason that I set this so high is because Bitcoin's so low. For Bitcoin just to get to this level, it's probably going to need to be in a meteoric, explosive rally like what we saw here in March. And if you catch one of those rallies, you're going to be very glad you did. What I would encourage you to do is, depending on the structure of the market, or not the structure, the sentiment in the market, you could either exit 1/3, 2/3, or all 3/3 right up here at 29,500. 29.5 is just below a bunch of resistance, so you're likely going to be able to catch the top. Again, you could have made this trade right here. You could have made this trade right here. Both of these times, this trade would have been profitable. You can catch the resistance right here around 29.5, exit, and you'll be solid. From there, if the market's super exuberant, then exit a third, lock in some gains, take out maybe your principal, or well, not your entire principal, but take out some of your principal, and then hold on to another 2/3 or 3/3. Because if CPI drops by 0.2, 0.3, 0.4, 0.5%, it is very possible, and in fact highly likely, that Bitcoin will rally up to at least $30,000, if not all the way up to 32,935. If you're wondering where that number 32,935 comes from, it is the local bottom that we set Here on January 24th of 2022, just a couple of weeks before the Russo-Ukrainian war began, just a few weeks before we confirmed the bear market. And once we broke below that level, 32,935, that was when everybody knew that we were in a bear market. Many people were calling a bear market in this area, but we knew we were in a bear market starting in May of last year. Basically, exactly a year ago, we knew that we were in a bear market. And so now, if we're managing to break above that level, 32,935, then that's where we would basically know that we're moving into a bull market. You can even see that level 32,935 right here is basically the middle point of this market that almost looks like a giant sine wave. If we do manage to move all the way to the upside, that would be the center line of that sine wave. So Bitcoin getting above 32,935 would be critical, but we can also expect it to be major resistance because of how important of support it used to be. If Bitcoin breaks above 28,545 over the next 24 hours as a result of CPI data releasing, if the market keeps in mind that Jerome Powell teased a Fed rate pause next month, if that CPI data release is large enough, if there's enough hype, if there's enough shorts getting liquidated, because there very possibly could be a short squeeze tomorrow. A lot of people are betting on a 25,236 drop because they expected Bitcoin to rally more following the Fed release. If everything aligns, there is probably a 30 or 40% chance that you're just going to see a gigantic rally tomorrow. And if you're in position with this trade that I just showed you, you're likely going to do pretty well. Now, I do just want to mention, I mention this every time I show a trade, but I want to mention it anyway. Again, this is merely an example of a trade. I would highly encourage you not to just copy this. I don't want you to just go and copy the trades that I set up. I am not somebody who I want you to just go copy the trades. I want you to maybe get an idea from it. You can use these numbers once or twice, but in general, I want you to be doing your thinking for yourself. I want you guys to think for yourself, because if you're just copying me, well, I can't be in 17,000 places at once because there's thousands of you guys. I can't be in all those places at once. You need to be able to do this for your own, on your own, and you need to be able to think for yourself, because to be financially sovereign, you also have to be intellectually sovereign. We have so many people running around our country and our societies today that know they're not financially sovereign, but they're also not intellectually sovereign. I'm not saying they're dumb people. They're probably very smart, but they're sheep, and they just listen to whatever anybody wants to tell them tells them. And that's not what I want for you. That's not what God wants for you. That's not what you want for you. You want to be intellectually sovereign. It's very important that you are not being controlled by what somebody else is telling you. It's very important that you listen to counsel. It's very important that you're wise and you hear what other people have to say. The mark of a wise man, this is an old Greek proverb, the mark of a wise man is the ability to entertain two options and not agree or disagree with either, but to rationally consider each before he makes an informed decision. That's what wisdom is. So I want you guys to have that kind of wisdom. And to do that, you can't just copy me. You need to learn what I'm telling you, the facts. You can copy me and saying, hey, RSI, these are the settings, MACD, these are the settings. You can copy me in that because that's just facts. You can copy me by telling me, if I tell you the molecular structure of oxygen is two oxygen atoms bonded together, then you can say, oh, I'm going to copy Jebb because that's the fact. Sure, facts are one thing. But when we're doing this whole thinking thing that God gave us, this logic, that's where you need to be able to be independent in your analysis. And so it's a great thing to say, hey, Jebb drew a trend line. That trend line is factually there. I'm going to draw it too. But as far as how you're going to implement that into trading, I want you guys to be financially and intellectually sovereign. And that is why we created Principles of Technical Analysis, because I don't just want to give you fish. I want to teach you how to reel in some giant fish so that you and your family can eat good and you can have that financial sovereignty. So if you want to learn how to do the technical analysis I just showed you, one-stop shop, Club DeFi's Principles of Technical Analysis. Make sure to sign up for it with the link in the description box down below. Former CT2A members get a 25% off coupon code. Shoot us an email, support@cryptojebb.com. And if you're in Club DeFi's beta, you can get access to Club DeFi with a discount code proportional in size to however much money you put into the beta. Shoot us an email, support@cryptojebb.com. We will get you signed up for that. All right, let's go ahead and read chat here for a little while. Really appreciate all of you guys tuning in. Crypto Surg said smash the likes. Thank you, Crypto Surg. Really appreciate that. That's how he spelled it. He says smash the likes. Queen said he's teaching us how to fish. That's my goal. Gotta love the coffee. Crypto Crabman, welcome. Said even if CPI is going up, they might lie about it. The economy needs a win. Yeah, that's all. That is a very good point. I have never been the most trusting of CPI data. I think that it doesn't accurately reflect how much inflation is going on Bitcoin and cryptocurrency. On the United States dollar, but it's the metric everyone makes decisions off of. Cool Bean said, no pause, CPI goes up. In that case, Bitcoin is likely going to trade sideways or have a correction down to 25,236 within the next 2 months. Unpopular opinion, might want to short. If that's what I'm telling you, I gave you a short. Are you telling people to short support? 600 people watching this, wow. I am telling you, if it drops below the support, let me be very clear here. I'm telling you that if Bitcoin has a bearish event, that being CPI comes out positive, which has always an increase in inflation, which has always led to a drop in Bitcoin. So there's a trend I'm basing this off of. And Bitcoin has a high volume red candlestick that lasts for more than, let's say, 15 minutes. It might last longer than that if it's moving super quickly. It drops below critical support that we have not dropped below in 2 months, which is the last support level that is holding Bitcoin up. And you see a long squeeze because people were longing, getting ready for that CPI data release to be a drop on CPI, but it's an increase on CPI. You can bet your bottom dollar I'm telling you there's an opportunity to short there. But that's a lot of ifs. That's why I'm telling you that's the caveat. That is not the main trade. The main trade that you want to be looking out for is the long trade. But what I want to tell you guys, just so that you guys have both sides, is I want to set you up in case CPI goes up or down so you're ready to profit in both. Because if you're only ready for one outcome, a lot of times the outcome that you're ready for doesn't happen. Having a backup plan is a great idea when you're working with something that you can't control. Now, there are times that having a backup plan just kind of helps you become complacent, but you're not controlling the market. This is not entrepreneurship in the same sense that like you're building a business and you're saying, I want no backup plan because I'm single, I have no responsibilities, I don't even have a dog to take care of. If I go bankrupt, fine, I'll live in a little tiny shack or something in the woods. That's fine. I'm gonna have no backup plan. I'm gonna be an entrepreneur. Boom. That's how I started this channel. I had no backup plan for years. Still, really, this is what I do, period. You can't do that so much with markets because you can't control where the market's going. You can control your financial destiny by making wise decisions and moving on a path towards financial sovereignty. But because you can't totally control you can't control at all, really, where the market's going to go, it is good to be prepared for both outcomes. So is it possible that there's a short trade? Absolutely. Is it what you would like to, is it something that you would like to do without a lot of background? I wouldn't do that. Jonathan Weiner said, how am I the first 15 minutes in? How am I the first 15 minutes into the stream? Come on, people. Let's see. Trump said the other day the best way to get inflation down is to get gas prices lower, and he is correct. That would likely help immensely. The thing is, gas prices are not down. The thing is, the way that CPI works is that it tracks the change in prices of consumer assets such as gasoline and natural gas and electricity and all these things in a 12-month moving average. Gasoline actually has not changed that much in the last 12 months. Believe it or not, you can even see that over here in CPI. It tracks it here. Now, this is not going to be the show table. Go here, look at gasoline. CPI is actually tracking gasoline as being down by 17.4%. Gasoline being down by 17.4% is actually the largest drop of anything on CPI. It is the biggest contributor right now to a drop in CPI. The thing that's actually leading CPI to be high are like food. Food is at 8.4%. Energy is at negative 6.4%. Negative 6.4% is dragging that 5% down. The tricky thing, and this is why I want you to be prepared for the short trade, this energy category might balance out and be zero next month, this coming month. And if that happens and food's still at 8.5%, all items is probably going to go up. So if that happens, then you need to be ready to short the market because there is an opportunity to make a lot of money when you have inflation go up because energy is no longer dragging inflation down. You have to be very careful about how you analyze this data. Okay. Shadrach Frost said, it seems like the like button needs attention. Please take a moment and click the like button for Jebb. Give love back and support folks. Thank you so much. Economy's built around oil prices. Yes. He's like a Pac-Man eating those longs. Market maker controls the market. That's true. Dude, you always have a cold. Check your house for mold. That rhymed. Our house is brand new. So like our house is less than 3 years old, and it is like spotless. We're clean freaks. So we probably, we could do that, but I think the more likely bet is that it's not mold. It's our 2-year-old that's in preschool. You know, I'm pretty sure he's where the colds are coming from. So I don't know. We might do that. It's probably a good thing to do every once in a while. But our house was built in 2019. We're only the second owner. Let's see. Good deal. All right. So make sure that you guys, if you have not already signed up for Club DeFi's Principles of Technical Analysis, you will get access to the Discord server over there. Let me just, so for everybody who's in, give me 1 second. I'm going to log into Club DeFi here, and I'm going to show you this post. Very simple post. I want to make a video in the future, just make it a little bit cleaner. But for right now, it's a post that'll work. So let me show you this. Uno momento. I will go into Principles of Technical Analysis right now as a student, and I'll show you where the post is. Let's see. Preview as student. I'm in the admin panel, of course. Preview as admin, preview as student. Here we go. All right. If you're in Club DeFi's Principles of Technical Analysis, scroll down on in here, and you can see all of these videos. All right. All of them right here. And make sure that you take all of them and make sure you invest in all of them. I want you to come here in the next 24 hours, and there's going to be a little button right here that shows you that there is a link to the Discord server, and you guys can get access to the Discord server right now. In fact, let me just go ahead and publish that just to make sure that it is good. Publish. All right, let me see if it's there now. All right, I think it's going to be there now. Preview as student. Boom. All right, I put it right here at the very top. If you're in Club DeFi's Principles of Technical Analysis, it's going to look like this. Club DeFi, the very first thing that shows up is Discord. Let me just click this, make sure this is correct. Boom. Like I said, very simple, just a little post, but this is the access to the Discord server. And because I just showed that on stream, I have to go in and redo the... You know, I really need to be more careful about that. That was kind of stupid. I'm going to go have to delete that. Give me 1 second. All right. Anyway, really appreciate you guys for tuning in. Let's go ahead and keep reading chat here. Let's go ahead and keep reading chat here. 1 second. One second. Cool. All right. We are going to have to wrap out here in just in the next couple of minutes. Yeah, cool beans. My brother had mold exposure and used to be exactly like Jebb. Maybe, I mean, we could check into that. We could see. Second owner in the first house is 3 years old. Did the first owner die of mold? No, the first owner was a state trooper with 2 kids. No, they were a cute little family just like us. We have 2 kids too. You should be good if the house is that new, as long as you don't have water issue like flooded basement or broken pipes. We're in Florida, so there's no such thing as basements in Florida. You could probably install a UV light in your AC system. These are a lot of good ideas. It is. We might check just because we do have a cold a lot. So I think it's just our son, because whenever we get sick, normally he's sick first. So that's the other reason we think it's just him, is because if we get sick, we're normally catching it from him. He's around 100 other toddlers all day. So, you know. All right, guys, we are going to have to wrap it out. By the way, before I go, I do just want to let you guys know something. And that is that we are now affiliated with TradingView. Yes. Whew. Super exciting. You guys can get access to TradingView using the link down below. And I'm really excited about it because when you sign up, you're going to be getting a ton of different perks. So make sure you sign up with TradingView using the link down below, and you can get access to all of the different, give me 1 second here, to the different types of plans. So if you sign up with the link down below, you can get access to the different plans here. You can see Pro is $12.99 a month. Pro Plus is $24.99 a month. Premium is $49.95 a month. These plans give you a ton of different perks. For example, with Premium, you can get up to 25 indicators on your chart, 8 chart layouts, and you can also get second-based intervals. I love the second-based interval. You want to know what the second-based interval looks like? Let's come down here back to, give me 1 second, I'll pull it up. The second-based interval, we were watching this when the FOMC meeting was happening. Come down here to the 1 second chart because you're on Premium. You can watch what Bitcoin's doing down to the second. This is really awesome. Like, this is a very amazing piece of charting. So make sure that you get access to TradingView Premium right now, and you're also going to be able to go back 20,000 bars instead of just 5,000. That means that if you're looking at like the hourly chart, you can go back a lot farther. Let me just give you an example of that. If you're on the hourly chart, you can go back 20,000 hours. So I just so happen to know there's 8,640 hours in a year. So that means that you can go back, instead of only like 8 months, you can go back like 3 or 4 years on the hourly chart, which you would not be able to do unless you had TradingView Premium. If you're a professional chartist and analyst like I am, it is a very good and wise investment to sign up for TradingView Premium. You can use the link down below and get a lot of money off, save a lot of money, and get access to it today. You guys know, of course, I talked to you about NordVPN. Save 60% by using NordVPN, link down below. You can also save a lot of money using TradingView with the link down below. So thank you guys so very much for tuning in and for signing up for TradingView. All right, guys, we're going to go ahead and wrap it out. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.